Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 8th of August. Starting off with the FTSE 100, which is becalmed, dead as a dodo at the moment, around the 50-day moving average. That's the blue line there, around 75.30. We're looking for, or hoping for, the market to head up to test that February resistance line around 76.90, but at the moment, obviously, with the RSI below 50 and basically a sell signal there, a failure at RSI 50, as we had back in June. The risk is that below the 75.60 area, we could go down to test support from the middle of July around 7400. But not much going on, rather becalmed. If there's a plus point there, it is that the 200-day line, currently around 7600, is still rising, so that may stem any losses or any dips that we have. Moving on to the DAX, and here you can see that we're still hanging or teetering on the floor of that rising trend channel from August last year. The level there, 15,700, let's say. While we're above that, then we're still hoping for a retracement back to the highs of the last couple of weeks, as high as 16,500, but has to be said, but the RSI at 42, it's rather difficult to rule out a retest at least of July support, just below 15,500. The 200-day and the 50-day line still just about rising, so that is okay, but at the moment, just the risk that we'll roll over and maybe even test that 200-day line around 15,200. But hopefully, we stay within that channel. That would be the best outcome. Moving along to the Dow, and here you can see that we've had the market, well, actually it's quite good in a way that we've actually found new support there at the 35,000 level, above old resistance, the previous resistance there around 34,600, and I suppose you could argue that the December peak 34,700, so above both of those, and also the RSI turned above neutral 50, which tends to be a continuation signal on the upside, through 35,000 500 or 700 actually, the last peak area. Then there is a chance of a move up to the 37,000 plus area, but even though that seems rather ambitious at the moment, but at least the downside here should be limited to 34,600 if we do actually fail over the next day or two. On to Bitcoin, which has been rather sluggish over the last 6 weeks. Still trying to find support here just below the 29,000 level. We've had a couple of dips to 28,600. That seems to be working so far, but the RSI still below neutral 50. Want to see that above that particular reading, and also there's a July resistance line there around the 29,200 level that needs to be broken. Really, to feel safe, we want to see this market back above 30,000 and back above the blue 50-day moving average to then give us a move back to 32,000. On the downside, the worst we would expect now is the 200-day line just below 27,000. But hopefully this market has seen the worst of the retracement since the middle of last month. Moving on to the stocks, and not too many exciting situations today, but worth looking at Asiamet at the moment. We've got the 50 and 200-day moving averages both rising. That suggests we're about a week or two away from a golden cross, or run up to a golden cross, traditionally the strongest part of the cycle. Rising trend channel here from March, and above the 50-day line, above 1.1 pence, basically looking for as high as 1.55 pence by the end of next month. And an RSI 50 rebound there, which is also helping the cause. So a few positives there for Asiamet at the moment. On to Contango, which delivered very pretty pictures in its RNS this morning. Here the shares trying to break that line of resistance there from September. Really want to see the shares back above 5.25 pence, so that would open up 6.5 pence maybe by the end of next month. And hopefully the shares remain above that 50-day line around 4.3 pence in the interim, ideally above 4.5, which is recent support. On to a stock which is rather more bullish at the moment, in the form of Destiny Pharma. It hit our initial target there around 47 pence. Above 47, looking for a retest of the initial 2023 resistance around 61 pence, and that V-shaped bull flag, as I call it, also backed by a rising 50 and 200-day moving averages, so they're probably 2 or 3 weeks away from delivering a golden cross. So looking pretty good there, especially after that unfilled gap to the upside that we had at the end of July. In fact, it's a double bear trap gap reversal. There was an unfilled gap to the upside off the low, and then we have also had that one. So twice last month we had gaps to the upside, which were unfilled. So a strong situation then. I would actually argue that 61 pence, probably the minimum that we'll see, and hopefully we'll see that by the end of this month. On to another stock which is doing us proud at the moment, Edenville Energy. I'm not sure when they're going to change its name, but a U-shaped bull flag here. We hit our first target there around 10.25 pence. Found support at that level and above 10.25, looking for a new push to the upside as high as 17 pence, which is a 1-year resistance line projection. Could see that by the end of this month, especially if the 200-day line starts to curl up as well. RSI has remained above 50 on the latest retracement from the July peak, so looking pretty good there for Edenville at the moment, above the 10 pence zone, looking for 17. Requested stock next, which I think was up a lot yesterday, IMC. Here we've made good on yesterday's move, broken the high of that day, and it looks like we'll close above the top of that June gap at 0.4 pence. Above 0.4, looking for as high as 0.65 by the end of next month. And to add to the excitement, there's also been bullish divergence with the lower lows for July, but higher RSI trace, so that should give a bit of momentum there. On to Lexington, which is also looking like it's in recovery mode. I believe they raised some money just a few weeks ago, breaking through the 50-day line and the July resistance around 6.25 pence, above 6.25, looking for up to 10 pence by the end of next month. Obviously, that would retest the May peak we briefly saw a few months ago. On to another Jason Brewer situation, Marula, and here we had an unfilled gap to the upside yesterday. We've broken the top of yesterday's resistance around the 10.9 pence level, and basically above 10 pence here we're looking for up to 20 pence by the end of next month, and if we're really lucky, by the end of this month. So the 50 and 200-day moving averages both rising, and the unfilled gap, a pretty big one and a pretty good signal there on Marula. Another stock which is doing what the charts were suggesting it would do is Overco Bio. We had our first target there at 9.5, obviously retesting May resistance. Above the 9.75 pence level of the May high, we were looking for as high as 13 pence. Just missed it today, 12.5, but maybe there'll be another go at that over the next week or two. If you're a fan of the shares and looking for greater glory, then there may be a move up towards the resistance line I'm just drawing now, as high as 20 pence by the end of next month. If we get a quick clearance of that 13 pence level, obviously the 50 and 200-day lines both rising, and an uptrend line in the RSI window, bullish divergence line, keeping the bulls happy at the moment. But we've got Scancell next, and here you can see we're breaking out of this falling wedge that's been in place since back in February. Unfilled gap to the upside there last month, and we've held above the top of that gap there around 9.75 pence, breaking that line of resistance there from April around 11.5, and above that we're looking for 22 pence as soon as the end of next month. I suppose if you're cautious, you wait for the shares to break the last month's peak at 14 pence, but looks as though probably done enough there to get the shares on the move, especially with the unfilled gap to the upside on the daily chart. Next situation is one which we don't look at very much, but Transense. Here we've had an extended consolidation for the shares over the last much of the last year. Rising trend channel from October. Had the breakout today through a November resistance line and through the 50-day moving average at 87, above 87, looking for 120 as soon as the end of next month. Star of the show today and for many days has been Upland Resources, and the chart resembling a bicycle spoke at the moment. We had our first target 0.95, then 1.5, Then we were looking for 2.6 by the end of this month, and next target there, it was 3.25 pence, which was a line of resistance which I was going to draw yesterday, but didn't. Above 3.25, best case scenario target now up to 4.6 pence or 4.7 pence by the end of this month, but we need to stay above the 2.5 pence level to get that 4.6 by the end of this month. So let's see if the shares can remain above that. I suppose there could be a chance of the shares retesting the 2.1 pence level, which was the initial August peak, but ideally we stay above 2.5 pence on an end of day close basis. Moving on to Wishbone, where there are some glimmers of light and hope. The reason for saying that is that although we had an island reversal there, we've come back, but we've remained above a rising 50-day moving average, so there is a chance there if people want to buy the dip here above 2 pence, we could have a retracement back towards the 200-day line there at 3.8 pence, but maybe you want to see an end of day close above yesterday's high at 2.5 pence before assuming we're going to go back to 4 pence on that one. Finishing off with Zephyr, which is also showing some signs of recovery. Here you can see that we've got one of our favoured setups, a consolidation above the rising 50-day moving average at the lows. So we are near the low of the range, obviously. So above that rising 50-day line at 3.6 pence. Looking for up to 4.5 pence by the end of this month. And a nice RSI rebound above neutral 50 gives the shares a little bit more glitz, and that target there towards 4.5 pence would fill the gap down that we had back in May. That's it from me today. More updates tomorrow.